Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A combined bearish opening black Mariboso and bearish engulfing pattern yesterday, if only just on the latter, which wasn't that hard to do as the previous session was an indecisive spinning top. The market was perfectly captured between the overhead significant bright red slowly declining head and shoulders neckline extension of the July 2017 to November 2018 move, currently at 109.82, and below by the flatlining mauve medium moving average, currently 109.34, ably reinforced by the 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. Recently, the market had exhibited indecision around and just under the bright red neckline extension. Well, yesterday it seems it might be trying to make up its mind for a possible move lower. Now, I previously stated I regard this bright red neckline as a proxy for the neckline for the August to date action, being an even eve double top. Thus, I'd also previously laid out a primary target X down in the 108.88 zone, with a secondary harder to reach target X1 down in the 107.91 zone. I'd also recently not been fully convinced that the market was ready just yet to head down there. Well, today that might be changing, though I am still cautious about a possible false break lower. So far today, we've been capped by the 50% Fibonacci line at 109.44 and testing down to that mauve medium moving average again, but not much more than that at the moment. Cable, aka sterling against the US dollar. An immediate countering bearish opening black Mariboso and bearish engulfing pattern yesterday, if only just on the latter, after the previous session's reactionary bullish engulfing pattern. Prices once again dipped down to test the somewhat surprisingly extended support of the rising green short medium moving average, currently at 130.75, piercing it and closing right on it. Overhead, we have the July 2023 high at 131.44 and the December 2020 low at 131.33. Meanwhile, below, we have the September low at 129.99 and then the rising medium moving average, currently at 129.42. So far today, well, an open just below the green short medium moving average, but not much of a move lower or higher. Prices do seem to favor staying around this green short medium moving average. Euro sterling. A second bearish black crow after the previous session's counter to the counter bearish harami. Prices closed for a second consecutive time back below the July 2024 low at 83.81 and the further congestion at 83.86 that caused the low in July in the first place. And for a second consecutive time the move down was halted, if on a closing basis this time, by the short moving average of all things, which is currently at 83.64. Looking below, well, there's not much until the August 2022 low at 83.38. And so far today, a further pressure lower, this time moving down clear of the declining short moving average and towards the August 2022 low at 83.38, though not very fast. US dollar against the Japanese yen. A bullish engulfing pattern yesterday, if only just, which wasn't that hard as the previous session was an indecisive doji cross. Prices closed well into the prior cap of the combination of the lesser Fibonacci line at 148.68, which was breached, and the 50% Fibonacci line of the July 23 to July 24 move at 149.61, which was not breached. The market continues its move up and away from the dark blue neckline, currently at 146.16 of the lopsided mid-August to early October reverse head and shoulder bottom, which that was originally masking a possible bearish halfway hesitation. This pattern has a primary target X in the 150-148 area and a secondary harder to reach target X1 up in the 153.60 area. The market will have to overcome some considerable resistances topside, apart from ones already mentioned. Notably, the flatlining gold long moving average currently at 151.23, the declining medium moving average currently 151.22, and the bright red shallow middle time currently at 152.30 of the late December 23 to early August 24 bullish shift pitchfork. The only other thing to bear in mind is the weekly key reversal up the market made last week. Now, so far today, an initial attempt higher, trying to reach up to that 50% Fibonacci line at 149.61, but failing to really do it, and pulling back lower, though not as far as the lesser Fibonacci line at 148.68 just yet. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier yesterday after the previous session's long-legged indecisive spinning top. Prices pushed further up and away, closing further up from the June 2023 low at 706.57 and up to test the combination of the relatively new dark blue upper time, currently 709.58, of the mid-September to early October based bearish shift pitchfork, and the lesser recent Fibonacci line at 709.99. This bearish pitchfork had been a bit of a presumptive move on my part, but it is starting to show an idea of the bearish angle of attack of this market, if it chooses to go that way. Now, so far today, a slightly higher open, but then a drop down to just short of the June 23 low before a pull back up towards the dark blue upper time again. Looking a little bit like a hanging man pattern at the moment. US dollar against the Mexican peso. A second bullish white soldier, but potentially a significant one. You see the move up based on the green rising short medium moving average, currently at 1934.11, pushed up and closed over the combination of the dark blue lower time, currently at 1938.5, of the recent mid-August to mid-September bullish shift pitchfork, which ties in with the purple neckline at the same level of the late July to late September lopsided head and shoulders pattern, plus the bright red lower time, currently also 1940.33 actually at the moment, of the very important big picture April to July bullish shift pitchfork. Altogether, quite a congestion within a very, very narrow range. Prices also pushed up and closed over the congestion at 1940.68, but shied away from testing the next resistance, which is the 2021 low at 1953.63. So you can see it looks a significant move higher, unless it is a false break, of course. All this is in the shadow of last week's weekly key reversal down. Interesting that. Now, prior to yesterday, I had placed, just in case, some potential targets below for a breakdown through the purple neckline with a primary target X down in the 1865.15 zone and a secondary harder to reach target X1 down in the 1802.10 zone. The harder to reach target, obviously. I was not sure about these, as I had stated over the last few days, and today will I consider them now being under threat of retirement. Now, so far today, a small move higher, but not as yet testing really that 2021 low, not just yet. Beyond the 2021 low, we have the April 2022 low at 1971.68.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.